Hi everyone, it's already June and so time for another investment portfolio update. In this video, I'll go through the current valuations on each of my investments, how much I contributed this month, and finally how I have been able to max out my full £20,000 personal ISA allowance for this year, including exactly where that money came from and then where I decided to put it. But first, I'll mention my lifetime ISA, which I opened quite some time ago now, and also my two private pensions that are from past employers. These accounts are basically dormant because I am not actively contributing to them, but that doesn't mean they aren't still making me passive returns. This month, the lifetime ISA, which is on Dodl, grew by £436 to a total of £7,194, whereas the workplace pensions grew by £677, reaching a combined total of £19,005, which I am really happy with. And if you know anything about these types of accounts, you will know that I definitely did not contribute all of the money myself, but a lot of it came from my employers when it comes to the pensions, and also the government in the case of the lifetime ISA, as you get 25% of bonus money paid in by them when you contribute. So again, we're talking returns on top of returns when it comes to the money I have put into these accounts. Now let's discuss my Vanguard investments that are now worth £23,777, and without me making any contributions at all, these have gone up by £952 since last month. Breaking it down by each of the funds, every single one of them brought in a positive return this month, and context is also super important. If you spend any amount of time following the stock market, you'll know that fluctuations are pretty normal when investing. That said, this month actually saw the markets recover quite a bit more from the turmoil around Trump's tariffs. So much so that my investments are now worth more than before the so-called Black Monday 2.0, where everyone was calling it a bloodbath as the stock market crashed. But zoom out all the way and this account has made me back about £2,750 of unrealized returns split across the 4 different funds since I started investing back in November of 2021. To be honest, I love this long-term view the most, and I'm looking forward to when I've been invested for 10 years or more and I can see the growth from my money having compounded and snowballed over time. And just so that you know, the money I have put into this stocks and shares ISA account has all been saved out of my spare income with the purpose of investing it for the long term, but also specifically so that I have the flexibility to pull it out before retirement if I want. And any gains or returns from this account will of course always be tax-free because it is an ISA account, just like the other accounts I will be mentioning from this point forward in the video. So overall, the investment is now worth £124, so 24 more than I put in, and the value of this account is also up by £6 in May. This is probably the platform where I'll be making any new contributions as and when I have the spare money, but I didn't have anything that I could invest this month. Unfortunately, our little hamster Grogu became unwell, and I took him to the vet on 2 different occasions, first for his medicine and secondly and unfortunately to be put to sleep. Those visits obviously cost money, but I am grateful we were able to do what we could to ease his passing. And aside from that, me and my partner also aren't at a point in our lives where we are able to focus a lot on investing into the stock market. I know to some people it might seem odd that I'm doing these monthly investment updates without adding to them every single month, but it's also important to me that I only invest money I can go without for a long time so that I can ride out any downturns in the market. And I wanted to point this out because it's also okay and totally normal to pause or maybe just reduce the amount you're investing from time to time. Sometimes you only get to see these people who are absolutely in their stride, investing thousands each and every month. And while that is good for them and their future, it's not always sustainable or even possible to manage that ourselves. Only you can choose what makes sense to you in your unique situation. And that's exactly the kind of call I want to help others to make for themselves. For the record, I am so glad me and my partner went heavy into investing when we did. And as you can see, we're still benefiting from these investments. So again, totally worth it. And I won't be selling or disinvesting or anything like that, because this money now has the job of earning passive returns for us, which honestly gives me a lot of comfort at the moment. I have a step-by-step investing mini course soon coming out that I'm offering for free to the first 50 people who sign up to my newsletter. As these spaces are limited, I do recommend checking that out sooner rather than later if you would like to get your hands on it for free. It's in the link in the description of this video. So now you're probably asking, how is it that I have maxed out my ISA contributions for this year? Well, it's because me and my boyfriend had already done the hard work and put away £40,000 worth of savings between us back in 2023. And we actually locked this away into a savings account. We got a decent interest rate out of it and almost £44,000 back by the end of the 2 years. If you've seen my latest video, you probably already know where this money went. But to tell you all who don't, it went straight into our Trading 212 stocks and shares ISAs to be held as cash. I know it's probably one of the most boring ways to max out the ISA allowance, but I was looking for a quick solution than having £44,000 in a holding account, earning next to nothing, where it could be making far more. If you would like to know exactly how much I'm making in daily passive returns from all of my savings and investments combined, then you can watch this video where I break it down in full. Now, I'm not going to be including this money in my future investment portfolio updates because while technically invested, this money is only in qualifying money market funds, and this isn't the same as investing in the stock market, and in my opinion, is not going to make back anywhere near the return of the stock market investments in the long run. So for me, this account is really just more of a short-term savings while we decide whether or not we need it in the near future. And I figure that if I want to invest again, I'll take some money out of this account because it's a flexible ISA, and that means I can move the money between different stocks and shares ISAs without wasting or losing my ISA allowance for this tax year. Circling back to my actual investments then, and by that I mean those specifically invested in the stock market. In summary, I had £48,813 invested last month. That has increased to £51,000 without me adding a single penny, which is an unrealised gain of almost £2,500 since last month. I am looking forward to seeing what happens next month, and I do hope you will tune in to see me in that video. But until then, enjoy the nice weather, enjoy making the most of your own hard-earned income, drop any questions in the comment section below, and have an absolutely awesome day.